talk about the yen carry trade. This is probably going to be one of the more in-depth sessions that I've ever hosted. Really quickly, let me ask you guys this beforehand. How's the audio quality? Is the audio quality good? Is it bad? Is it different? I'm testing a different system out and wanted to make sure that everything is good to go audio wise. Okay, good, good, good. Perfect. All right, so let's get into it here tonight. We have again, this is I cannot stress enough. Let me actually get this is a Christmas gift for my mom. We for us in our with my mom and I, we just tell each other whatever you're gonna buy me, this is what I want. Okay. Forget all this. Let's be surprised. We don't need surprises. It's been like that since I was like 10 years old. Um, so like I said earlier, guys, this is going to be a very in-depth session. We may run over. I'm hoping not, but we may run over. So just be prepared for that. Now, I will first and foremost have to tell you, I'm not acting in my capacity as a commodity trading advisor. Simply here to show you opportunity. What you do with that opportunity is all up to you, as well as you got to be aware of any and all risk, understand that risk, be willing to accept that risk and take on that risk. And any trades that I show here today, just know that if you decide to take them, they are of and on your own volition. Now, for those of you in here that don't know me, anybody first time in joining the session, type in a Y or yes if it's your first time in joining the session. No first timers? Going once? Going twice. All right. Well, then everybody knows me. So, quick housekeeping thing. Got a couple of seconds. Okay. Quick housekeeping thing. Discord. If you have yet to join the Discord channel, let me send you an invite. Copy and send to everyone. Here is the link for Discord. All right. If you have yet to join it, please do. I'll tell you guys, it's been great. Just, keep an eye on it. Been great seeing trades from and Freddie going into, the options expiration, which was $3.1 trillion of expiring options. Freddie, way to call that out. And Stu showing his trades on SPX and giving people and showing people, hey, this week of Thanksgiving, it's, you know, since 1990 it's the busiest week of trading and it's always condensed into like 3 days. So we will see what that has, and if last week was anything, man, oh man, has it been busy. If it's going to be like last week. The other thing, guys, I want to call attention to Trading View is having their big yearly sale. I tell people this every year. This is the time to buy it. Okay. Then what you're going to do is you're going to renew every year on Black Friday. 70 to 80% off. I just buy this premium one. I don't need the ultimate. So the premium one is what I typically do. I shared a link in the Discord, and I'll share it here if you guys do decide to do it. Here is the link. Copy. Uh Paste. There you go. That's the Black Friday deal. And yes, Sharon. Oh, nope. Hold on. I'll send you a invite directly to you. There you go. Perfect. So there's that. Got that out of the way. What else did we have? Monday, there may be a special webinar. Keep an eye on Discord. I will post in there if we're doing it or not. But definitely join both of those. Then let's get into this week's announcements. I don't know. One box appeared, the other one didn't. Hey, that's my fault for not checking it. But this week, fundamental wise, we should have PPI numbers come out, retail sales numbers come out, and pending home sales as well come out. Sorry about the dogs barking there in the background. But PPI numbers come out, retail sales numbers come out, and pending home sales on the 25th. And then on the 26th, we have unemployment claims, durable goods, and preliminary GDP. That one is still like TBD. To be honest, it's tentative. We don't know if we're going to get the GDP numbers yet because we don't have all the previous numbers, so we can't really forecast GDP. All right. Let's see. Then reporting earnings this week. We have Zoom Info or Zoom, sorry, not Zoom Info, just Zoom, ZM is reporting on the 24th. We have Alibaba, Dell, HP, Best Buy, and Dick's Sporting Goods all reporting on the Tuesday, the 25th. And then John Deere reporting on Wednesday, the 26th. So, one of the ones that we're looking at, obviously, and we'll be watching very closely is Zoom. And I will take a look at that here in just a second. Let me just get that off, and then let's go. Zoom. Don't need bonds. There we go. So, Zoom, as you see, it has pretty much lived in a range for some time. Like, if all I got to do is go back and you can see that we have lived in between 55, well, really, I mean, this became its new floor, 65 and 87 for quite a while. And I do believe that Zoom will more than likely continue to beat earnings, continue to have good revenues. They will continue to show the growth that they have. If they do beat earnings and beat revenues, fantastic. This stock will look to shoot up. If they miss, it will be the first time since going public that they've missed, which I'm not worried about. And we may see this gap fill $5 lower or even back down into the $60 range. So that's a $18 drop if we miss earnings. However, if everything stays par for the course and we Zoom shows good earnings and good estimates, then we will see in good forward guidance. Probably, I guarantee you, put it on Polymarket. I bet you we hear Zoom talk about AI and talk about NVIDIA and talk about OpenAI or Chat or Gemini or whichever one that they want to talk about. But I guarantee you we hear something about something with AI, which has been the buzzword to pop a stock up. So if we see that, maybe we get back into the 85, 95 range, and which would be fantastic. So that is Zoom. Now, before we get into the charts, there's a couple of things that I want to talk about. The first is the NVIDIA issue. How many of you guys are familiar with what has gone on with NVIDIA since reporting earnings the other day? How many of you guys have seen this dramatic, like, the day after earnings, the market shoots up, and then the market shot up the pre-market and then just absolutely tanked. How many of you know the reasons why this has happened? How many of you know the reasons why this has happened? Liquidity? Yeah, William, there you go. There you go. The good news was already factored into the price. Well, that may to some extent, but the what has really occurred from what I have seen from economists and things that I know and follow is what's called circular financing. Now, this happened in the 90s, in the dot-com bubble, and it's kind of rearing its ugly head again. And so I built this infographic to explain what's happening, okay? Is that let's take over here. We'll use OpenAI, Anthropic, Mistral AI, and XAI. These are like the, major, and you could throw Microsoft in there as well. And they are purchasing cloud compute and they are purchasing chips, right? They're purchasing cloud compute and they're purchasing chips. And so what's happening is that money is going into NVIDIA, and in return, NVIDIA is then investing the same amount back into OpenAI, Anthropic, XAI. The same is happening over here with CoreWeave, Applied Digital, Lambda Labs, several others, right? They're purchasing GPUs and cloud hardware, and they're getting money back into NVIDIA. And we're ending up in this big loop. Okay. John, that's hilarious. That's only reserved for some states, as you know. No, I'm just joking. I know you're laughing right now. I know you're laughing. So here's where the major problem occurs, right? Is have you guys ever heard the story of like how a $1 could get the entire globe out of debt? Because like the US owes money to Japan and to China and to the Middle East and to Europe and to Africa, and then they all owe money to the US, and if the US paid them back, they would just pay us back, and then everything would be debt free, right? So this is the example that is people are using for circular financing. And when circular financing becomes uncovered, well, it's not sustainable, right? Because think about it. Here's a great example. This was just announced like this morning. Just announced this morning, like OpenAI bought $10 billion worth of GPUs and cloud compute after NVIDIA invested $10 billion into OpenAI. It's a Three Stooges bit. I love it. Do you see how this makes for a risky trade and a risky environment? It's like they're buying their own product. And so, while yes, technology gets pushed forward, and yes, I don't think that fails, and no, I don't think the whole system doesn't fall apart. Where it becomes a danger is if we introduce something that breaks the flow of money, right? If it introduces something that breaks the flow of money. Because let me ask you this, right? If all of a sudden we take these guys and this little company called Alphabet, right? Alphabet. Yeah. It just looks wrong. Maybe I'm missing a letter there. Who knows? I'm tired, guys. I'll be honest. 3:30 to 4 comes early every day, no matter how little or how late I stay up or early I go to bed. But anyway, so what has gone on is Alphabet just introduced something and it introduced something in a big way. Like, I don't know if you guys follow AI data releases and AI testing companies, but there are people, you can go on YouTube and find people that review the news in AI every week, and you just watch that news and it'll astound you how much better Gemini is now than OpenAI, than XAI, than Anthropic, than Mistral. It's so much better than every other AI on every benchmark test. It's by far and away the best that there is right now, and it's only getting better. Well, they did something different. What they did was they introduced their own chipset called the TPU. Now, NVIDIA has GPUs. This TPU is better, faster, cheaper per calculation, and a lower energy cost. So if these guys say, well, hey, we're going to take our money and put it here, then what happens here? So if you invested in Nvidia, yes, you definitely are. Priyanka, we're not there yet. I don't know if you're listening here yet or not. So if you invested in Nvidia, you're investing in all of those companies. Kind of. It'd be like, Lee, let me ask you. If you took $100 from your left pocket and put it into your right pocket, are you any richer? Can you tell people you're worth $200? Right? You're not richer and you can't tell people. That's exactly what's going on. They're taking 100 from their left, calling it their checking, and putting it 100 in their right and calling it their savings. And now they're saying they're worth $200. Okay. That's what's going on. Like, think about it, right? Imagine if you went to, I don't know, we have Publix grocery stores here, right? So imagine if I went to Publix and I put everything in my shopping cart for Thanksgiving and I just went to the checkout. I spent, I don't know, $500, right? So I spend $500, and then the grocery store comes back and says, hey, by the way, you are a 500th customer, so we're going to give you $500. Well, they didn't make any money off of me, and I didn't lose any money off of them, but we had a dual exchange for no purpose. And that's the big problem, right? That's the big problem right now with NVIDIA. And so this is something just to be aware of, because as NVIDIA goes, as you saw on Thursday and Friday, I mean, there's no question as to what dropped the market, right? Yes, somewhat with the expirations on options, 100%. That is absolutely in there. Let me just not say anything like that, right? And that is notwithstanding. But I mean, look at the last few days. So let's see. The probability of a rate cut went from 23% Thursday to 71% or greater now. Let's take a look at that. We'll talk about rates as well, because there's a bigger rate that we need to be paying attention to, and it is in hours. So yeah, we're at 69.4% for a rate cut. So about a quarter basis point. Again, the Fed always has to. I mean, the job mandate and the joblessness is really weighing in on that, on their mandate. The inflation side is still to be determined, but it's gonna be hard, I believe, for the I look, let me say it this way. Should the Fed cuts rates? Sure. Okay. Can we all agree on that? I believe that. I'm gonna play devil's advocate for a second. They don't have the real information and the real data on the job side to know if the anecdote is true or not. And if they don't know that, and they don't have GDP numbers, and they don't have inflationary numbers, and they don't have that information back from the last, 40 some days, can they make an actual assessment of what's going on in our market? That becomes another issue. Now, that would, if they cut rates, I think it would pump some, it would help pump up the market. Now, the ending of quantitative tightening, which is reducing the investment in the stock market, that's some of it. Some of this is just seasonality and rebalancing and things like that, and profit taking and things like that. But right? They can't really cut rates if they don't have the real data. Like that would be like, you going into the doctor with a splinter in your thumb, and the doctor says, "Well, I'm going to just cut it off because it could be infected." Rick, the TPU stuff came out on Thursday. I believe it was this day right here. So if we go to Google, GOG, um, I believe it was Thursday that information came out. Thursday or Friday, Wednesday or Thursday. When did the new Gemini come out? Let's ask Gemini. Um, let's see, Gemini 3 release date. There we go. 5 days ago. So that would be Sunday, Saturday, Friday, Thursday, Wednesday. Wednesday of last week. So that's when Gemini 3 came out. And that's when they announced it was trained on TPU data or with TPUs, not with GPUs. So that's when that came out. So the next thing that I want to discuss before we get into the market is this is something that I'm going to just tell you guys. Actually, let me phrase it in this way. It will be controversial. Okay, this will feel controversial. But I'm telling you guys, this has been historically the same thing has happened in 2006, which created the 2008 crisis. Okay? And I am putting this on your radar because I believe it is important to be on your radar. And it is why I'm so passionate about the investment opportunities that I offer. Because there's something that is not being talked about that absolutely needs to be talked about. And it's centered around the Japanese yen carry trade. How many of you guys in here know what that is or have no clue what that is? Let's see. No idea, no idea. Some knowledge, don't know. Some knowledge. Yes, Rick, I do believe so. So Euro dollar YouTube? Yeah, I don't even know what that is. I'll be honest with you. I don't know what that is. All right. So let me do this. Give me one quick second here. I have something for you here as well on that. All right, so let me just do this. And this should make sense, okay? Let's see. Can you all see the graphic I just put up? This was another one that I thought it looks too busy. Maybe I shouldn't do it. So for years, okay, and I mean for years, like if I go to tradingeconomics.com, tradingeconomics.com, and hopefully it remembers my sign in. Please remember it. Um, you know what? We'll just sign in with Google. There we go. That works. Oh, no, 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 cancel. Okay. So I'm gonna go countries. I'm gonna hit on Japan. I'm gonna go to interest rate. If I show you guys, wonder if I can do it here on TradingView. I thought it can do that now. I think it can. Yield curves. So if you look at Japan's yield curve for forever, um, it has been it has been one of the lowest historically, right? Interest rate. EST. Japanese interest rate. So let me also take off hedge fund trender and the EMAs for a second. Here is Japan's interest rate, and I will go not by daily, but by a yearly chart. So from really in 1995, Japanese interest rates hit 0.5%. In 97, they went from 0.5% down to 0.01% in 1999, and they were 0%. They did get it to a 0.5% in 2007. And then in 08, 09, they had to take it back to zero. And they actually, in 2015 and 16, they went negative in 2015 all the way until 2023 when they were able to raise it back to zero in 2023. So 8 years of a negative interest rate. That meant the bank would pay you to borrow money. Well, let me ask you this. If I took money, right? Let's think like a bank here, right? Let's say I took $1 billion. Okay. Or you know what? Let's think easy. We'll just do easy money, right? $100. The bank will pay me 0.1% to borrow that $100. So every day I make a penny, right? Every day I make a penny, right? Well, 0.1. Let's just make sure of that. 100 times 0.1% equals, yeah, every day you make 10 cents. So every year I make a dime on borrowing this $100. Well, if I were to take this and then I take that $100 and invest it in the US stock market, let's say, or the bond market in the US, and I make 5% on my money as well every year. Well, now I'm making 5.1% return simply by borrowing money in Japan. Does that make sense? Yes or no? Right? That's a great thing. Borrow money from Japan, invest it in the US, you pay the bank back whenever, and you got all this cash, right? Well, when it was at zero and even at 0.5%, it's totally fine. But here's where the problem starts is bonds. Okay. As long as Japan's bond yield has remained below 2%, everybody would just put their money there. The Japanese carry trade was considered the safe haven of trading since 95 because they keep their interest rates low. Well, Japan has been raising their interest rate, right? They're back up to 0.5%. And what's now happening is the bond yield that is up to 2.5% for Japan. Well, what that means is that the money that you were borrowing to go invest it, you're now having to pay 2.5%. Well, now I don't make as much money. So do I want to keep the yen? Do I want to keep borrowing? If I'm not making, like, let's say I'm borrowing at 2.5%, but I'm only making like 3 or 4%. And by the time you convert for currency, I'm down really to 1%. Is that worth me borrowing? Yes or no? To a big business, to a bank, to a huge institution, right? No, it's not. It absolutely isn't. So they go, and what do they need to do? They need to pay back that money. Well, in order for you to pay back that money, you have to sell whatever it is that you're holding. So when you sell whatever it is that you're holding and are invested in, does that market go up or does that market go down? That market goes way down. Now, this is what I feel is going to create the next big correction in the market. We saw this happen, this very same thing happen in the Thai bot, which created a huge liquidity event. And then Japan will then have all this excess capital that it needs to go deploy somewhere. Well, it'll deploy it somewhere where they feel is safe. And if they feel that the housing market is safe, or if they feel that, you know, another country is safe, or wherever they want to deploy it, they will deploy it. They may reinvest it into their own infrastructure. And that creates kind of a tumultuous thing to happen in the stock market because the Thai bot created a liquidity event. The liquidity event created they took all of this cash that they had and they dumped it into the US banking system. The banks started making risky loans. Those loans became they became the crux of what the pin that pricked the bubble of the housing market. Okay. So we don't, Ryan, no worries, right? We don't know, Sharon, where they're going to invest it because this hasn't happened yet. This major sell off is starting to happen, but we're not seeing it happen right this minute. Okay. Which also causes market makers to sell in order to hedge. Yes, Ed, absolutely. Great call there, Ed. Took that down a line. I didn't even take it down. Great call there, buddy. So yes, you create and then what happens is you get some of these bots and stuff like that, these high frequency trading bots take over, and then you really create yourself into a whole heap of trouble. Okay. And so, look, I believe that all markets are bubble markets, right? It just, the bubble can just keep expanding, 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 and the bubble can continue to grow until there is the need for capital, right? It's it's like, if you could put all of your paycheck every month into your bank account and never take it out, great. Until something happens and now you need some money, well, now you got to take it out. That bursts the bubble of all that saving, right? Same goes with the markets. Think about it the same exact way. And that's one of the things that we may see is the unraveling of this. Okay. The unraveling of this to show that maybe this just isn't going to continue and money will start flowing this way. And that will cause this to give us that. Now, when do I foresee this happening? I honestly I keep track of the bond yields and all of that every week for Japan. Personally, if this gets to like 3.5%, I think that's the start of the red flag for me. And couple that with what we're seeing out of NVIDIA with the circular financing that we just talked about, this could end up spelling like a big, big market correction. Okay. Um, so this is something that, right. I wish I had a crystal ball. I had a magic 8 ball once, but that was about it. Right. That was about it. I am not a soothsayer. I am not a fortune teller. But if I had to put my money on when the correction would be, I think Q3, Q4 of 2026, it'll be the kind of the last hurrah. and then something in 2027, mark my words here, something in 2027 will create the next crash. That is what I've said for the last 4 years. And I've been a bullish person for the last 4 years. This year, I thought we'll see some sort of whipsaw in the markets. I said that in February of this year at a mastermind event that we host here in Orlando. And if you guys ever want to come, you'll be able to contact Brent and come to that. But the other, I said that in February of this year, is that we'd have whipsaw events, and then next thing you know, in March I was right, and in April we whipsawed back up, and then we whipsawed back down, and we're seeing the back and forth all the time, like a tennis ball at Wimbledon. So why does Japan want interest rates to rise? That's a great question. You see, there's actually there is an interest rate that if we go back, and I'll look at let me see if I can pull this up. Fred Um, US interest rates. There's actually a really perfect harmonious balance of where interest rates are high enough where banks and governments are making money and people are earning money, businesses have enough to spend, and it doesn't hurt them. The cost of capital isn't too high. And in the United States, I can tell you, because we have a lot of history here. That number is between 4% and 3%. Like if you highlight what I just highlighted there and you look at every single, few years that was in this zone, there were some of the best years of our economy ever, right? You look at like 2000 and here's 2000, right? We had that, we were dropping, but in the early 90s we were rising, and in 2005 we were rising until 2008 we were falling. The last few years have been great, right? We look at the early 90s were fantastic, the mid 70s were great, the mid 60s were great, the early 60s or late 50s were all right as well, right? And then all hell breaks loose way up here, and all hell breaks loose way down here, right? This is recession zone where we're trying to figure out how do we come out of the recession. This is the great zone, or this is the, we can't do nothing because everything's so expensive zone, right? The market's crashing zone up here. And we eclipsed in that area for some time. And then we're having that pullback. You can see that happens with interest rates. They're highly correlated. But 3 to 4% is where banks are making money, businesses are making money, governments can make money, people are making money, because if you have an interest rate of 3% and the earnings rate, your average hourly earnings is up 3 to 4% per year, then you're outpacing inflation, you're outpacing interest rates, and that's the big thing there. Okay. Rick, I'm not sure. Money market funds, hedge funds being short this last bull stock run, needing invest before in the new year. What are rumors of money market funds, hedge funds being short last stock bull run, needing to invest? So, Wes, I own a managed fund, and I worked as the vice president of capital markets for a hedge fund for a number of years. And I can tell you from what I know, many of the funds are still in and they're still bullish, and they have some, they hedge their positions, hence the term. But I don't know. We'll see these like money market funds or whatever. I don't think those will, collapse or anything like that. There are safe ways to protect yourself against any downside risk. Two of those that I talk about, use, own, have my parents own, have my in-laws own, have everybody I know I can help. I do help, and I don't care if you got 25,000 or 250 million. I would gladly give you some time. If you guys want to learn about that, and the types of investments that I can help you with. Give me a second. I'll bring up my Calendly link and I'll share it with you. Oh, actually, I think I have it here. Give me a second. Yeah, there we go. Let me just make sure of one thing because I didn't have Thanksgiving blocked off. And yeah, that's not, not gonna not do that. So let's see. Yeah, so should be good to go. Okay, cool. Okay. So let me send that to you. So if you guys ever want to learn about this stuff from me, book some time. Right, just book some time with myself. And then if you want to, also have Brent, I have Todd available. I have several people available. There may be some blackout dates in there. I'm going to be out of state for a few days in December. My brother's graduating from West Point finally, so the older one. So, would Yin Rising be good for metals? Dan, they don't do really much metal exports or anything like that. So it wouldn't. Oh, do you mean like would it be safe to put your money in metals? Is that what you're asking, Dan? Sorry, I thought about the question as because I was like, well, they don't do exports, so it wouldn't affect that. But I see what you're saying now. Yeah, gold and silver, a market crash, you're seeing that cycle roll into gold and silver, and that's where that's going to land. I am a student of crashes. I love reading about it because that's the only way that you're going to be able to protect against it in the future. You know what I mean? Like, you can't, you got to learn what you did wrong and what decisions were made wrong and what was created that caused the wrong and the things that have happened that have been a lot of wrongs in the US in the global economy, and a lot of that correction is coming. And another, this is a more highly correlated, and correlations aren't causations, but price of Bitcoin, right, falling down to 86,000 last week. If y'all, how many of you guys were in here last week? Type in a wire yes if you were in here last week. I just want to track this. I had said that Bitcoin could potentially fall to 88,000. I don't know if it would, but I said it could, and that's where it could be. And you know what? I was wrong. I missed it by the bottom by $8,000. Okay. Missed the bottom by $8,000. But if we continue on this path, it could recover back up to 90, 94 ish, somewhere in that 90 to 94. And if it does, hopefully we don't see it drop down to 63. There is a case I have even heard of it going lower to even 55. But if we see 68, I'd probably pick a little bit up there, right? It's a very highly speculative asset. So it's not something that you throw a whole bunch of money at and hope that it's your guaranteed retirement solution. We don't know what this is yet, right? Some good ideas, but speculation, move stop losses up, slide them up, trail the market with them. That way, the worst thing that happens to you is you make a whole bunch of money and then you put it back in at a lower price. All right, that's what I'll say to that. Now, I do expect it to probably get up to that 90 to 95 range, and then if we see another set a little bit of weakness or something like that for turnover, we will see. All right. Now, let's get into some of the stocks for today. I know Lululemon is one of them. Again, I had you guys get in around 170, so we're only down about $2 in this right now. However, if you got in later on that, I think we're just holding support. We're waiting. Really, it's going to be wait for earnings, and you're just holding it right now. Would I add money to it? Not really, not at this point. I think that if we get back up to 178 and we start, let me do this too. If we get back up here to this price point and we fail to close above 178, then I'm going to abandon ship for now. So I'm looking for this to rally back up to 178. If we fail to close above that number, I am just going to abandon ship for right now at that 178-ish number, okay? So let me bring that down, and we'll keep checking on that every week. Now let's go to, let's see, what were some of those others? Coinbase. Again, Coinbase is tanking because of Bitcoin, right? Coinbase is chasing that gap. I know we talked about that. I know the person who asked for Coinbase. I know we talked about this. This dangerous gap, you know. And also, here's a look. I'm not gonna tell you how you should do anything. Let me just say this. Here's one of the things that I realized for myself. Okay. One of the things that I realized for myself when it comes to dollar cost averaging, there's two schools of thoughts when it comes to dollar cost averaging. One, you just keep buying as it's falling and hope one of those times that you buy, just one of them, it's the time where it, recovers, right? That's a okay philosophy. What I like to do, exactly. I don't like to catch falling knives. I don't. I'd rather catch something that's on the pick up, not on the drop down. Okay. So, what do I mean by that? Is that let's say I see one bullish day, and then I see another pullback, and then another bullish day, and then a pullback, and then another bullish day. On that, like, third or fourth day, that's where I'm adding. Right? I'm looking at maybe adding in here, maybe adding here. I'm adding on the ride up, not the ride down. And I promise you, you try doing that a little bit, you just feel better, okay? You feel a lot better. Now, this gap here, it is way down there. 215 is where this is. So we still got about, oof, what, $25 there? Yeah, $25 there for it to potentially fall. So it could continue to rally. Hey, that just is what it is. We will see what happens in the cryptocurrency world. Right now, Bitcoin is up from those lows. It's sitting at 86 right now. So I'd imagine a bullish day would be in the cards for Coinbase if this bullish move holds from Bitcoin. The other one that somebody asked for was Meli, Meli. All right. So Meli, again, we saw the pullback here. We see the drop. It it could still fall to 1847 from where it is right now. I still think that is our low, and that's what we're targeting. Let's see here. And sellers are still in control. And look, it's just continuing to tank. So if we see something that improves it, fantastic. Um, Carrie, we'll definitely get to that one. Don't you worry there. There was another one somebody asked me, or TSM. Look, I think that TSM, do I think we're going to have another pullback before another drop? Sure. Absolutely, right? We still have a lot going on with this whole AI play as people, figure out how they want to invest in it and how things are going. But the D extension for Taiwan Semiconductor is down at 256.74. If I see it break structure, yeah, I'll re-enter. If I get a blue dot, I'll re-enter, but I'm not entering while selling energy is there, right? OKLO. OKLO, we're at 88.17. Again, this company, I just don't see going anywhere. It has way too much meaning for the future of energy. A lot was talked about with this over the last week and from the Secretary of Energy as well. So we'll see. We also got some good signs here for some bullish opportunity heading back up from this 88 number. But if we're in it at wherever you're in it at, I still, if we get down to 66, use that as another time to potentially buy for yourself, or wait and make sure it's bouncing up before we go and buy again. All right. So I do see that we still got bearish movement. Doesn't shock me. However, we have something that's signaling to us that there's a potential for some bullish movement there. There is absolutely some potential for some bullish movement here. So look for that relief trade. We're going to check on NTLA as well. That's one I talked about last week. Again, I just like the names that are investing in it at these lows. It's not like something that was horrible happened. It just literally they're on to their next phase of their clinical trial. We're not worried about anything here. And it looks like markets are opening and we're seeing some pre-market push here. I like it. I like it. So let's take a look at the SPY here. Oh, that was Friday's move. So Friday's move of about, a slightly bullish move there. If we look at the bearish move that happened, and let's go here. And we reached this D extension already. So we know we're going to pull back and move higher. So we could see this thing rocket up this week, 670, 680 again. And if we get 6,800 or 6,075, 7,200, I'm sure people will be thrilled with that. And the market overall will be a bullish market. And we will go into this holiday very, very happy. Disney, I think I discussed this last week as well. Disney, I am not buying into until around the 93 to 88 mark, right? My targets on Disney are very, very low. 86, 93 are the two targets that I'm looking for. We've already taken out this first gap. These are the last two. Well, the catalyst for this is definitely going to be the financing that the money they just spent on Hulu and raising the cost of Hulu, and probably going to lose subscribers because streaming is now literally the same expense as cable was. It was the same expense as cable was. So, let's see here. What else do we want to go into? Let's take a look at silver. Let's go SLV. That seems to still be, it's still going to be a great trade. It's one of those I'll hold forever. I'll hold it till 60 if I can. Not 60 years old, but $60 in price. I do think silver will head up there. Let's look at gold. GLD. Gold prices, if we go from high to low there, found natural resistance, came back, retested. We did fill the gap on gold, which is good. However, And we do have a gap up to fill, which is great. So I could see this, pushing up. Um, I do also have a case for it coming back down to 347, right? So on GC, that would look like this. Pretty much the same chart. Dropping down to 37,888.3 is where we would be looking at futures. Okay. Let's see. It's starting to, right? Pre-market just really opened here. As you can see, it's starting to move a little bit. It's moved down a little bit, but nothing crazy, Deborah. Let's do what other stocks do we want to run through here today? Let's take a look at Tesla. Tesla wise, again, you know, look, I think if you don't own Tesla, I'm sorry, you're making a great mistake. I think Tesla is going to be one of those companies that you just need to own a couple of shares of, okay? A couple of shares of absolutely do. Let's see. Palantir. I think Palantir will more than likely let's see here. Palantir will more than likely rebound a little bit going into Monday, Tuesday, and then probably have another wave down to 145. I think that where I see Palantir, look, are they going to continue to make money? Yes. Are they still going to be a company that's going to be around? Absolutely. Again, highly correlated with cryptocurrency. They are, they're a government company. That just is what it is. They're not going to fail. They're going to be huge. So I think this is a hold on to Palantir. Maybe pick up a little bit more if it gets cheaper. And by cheaper, I mean back down into, major levels of support and resistance, 140, 130, somewhere in the 120 range. Again, 106, right? And then lastly, 67. Do I think it gets that low? No. Um, let's see. AVGO. AVGO low I'm looking at is like 324 back down to support and resistance, but this gap is always scary when you have big gaps like that. So 306 could be in the cards for this thing. Micron. So Micron's very interesting. I think we get a bullish movement out of this for about 20, 30 bucks before we see it potentially drop to 150. Um, and again, tech space, tech sector, same thing, gonna be tied to Nvidia. Robinhood, this is one of those companies. I think Robinhood is gonna be, I'm gonna boldly say a huge prediction here live that will take so long for me to be proven right or wrong that everybody, by the time I am proven right or wrong, will forget about it. So that's how bold I'm about to be here. See, at least when I tell you these crazy predictions, I'm super honest about it. I think Robinhood will actually end up becoming one of the largest in financial companies in general in the future. Definitely one of the largest financial investment companies ever. And I mean, we're talking Morgan Stanley, JP Morgan, Wells Fargo, that type of wealth generator for people, right? Charles Schwab, Thinkorswim, Robinhood's going to be up there. And so this is that's an extra long-term play. But could it pull back further? Absolutely, it could. Absolutely, it could. It also, I do think that we'll get a next little wave up and then another one down. Yes, larger than Interactive Brokers. Actually, you know what? I don't know because Interactive Brokers, they have the distinct advantage of working with all the major like hedge funds and things like that. So that's one of those. SoFi, again, I'm very bullish on. I think when we get a blue dot here, I would absolutely look for a buying opportunity here up to the 36 range. I'm a big Anthony Noto fan. Love his how he runs things, and that is not to be punny because he was a running back for Army, but he is a great leader. Again, on UNH, it did exactly what we thought it was going to do, right? It came down to 320, it filled 320. We will continue to see this thing rally. It beat earnings this last quarter when reported, and then it had a little bit of correction, right? Let's see. So yesterday, what is this? United Health Group as an independent director on. Oh, okay. United Healthcare appointed Dr. Scott Gottlieb as an independent director on November 18th. And um look, I just believe that a company like United Healthcare, they're just not going away. Okay? They're not going away. President Trump just invested in them $82 million dollars. All right. He bought stock in them. Look, he said if it worked for Pelosi, well, it may work for me as well, right? If it worked for Marjorie, then why couldn't it work for me as well? So, if he's investing in the company and he's the president, well, what do you think? Do you think he wants to lose his money? No. So, could it fall to 274? Yes. I would pick up some more there because it's still going to 581. That's our long-term target. This is not a I'm not looking to trade for tomorrow with this. I'm looking to buy and hold and build some wealth, right? Um, so that is very interesting. Dennis, were you here for our yen talk earlier, or did you miss that? Ah, and Dennis, I need to give you a call as well. Or if you can, book some time with me and let's catch up here soon. But the yen we talked about the yen carry trade and its unwinding and what that may mean for the markets. So if you want to look at yen futures, is it 6J? Yeah. I mean, look, their interest rates up, currency down. If the yen continues to get weaker and their bonds continue to get stronger, which the 30 years already up over 3, the 10 years up to 2.5, if we continue to see this bond yield happen and that carry trade unwinds, that is going to spell bad news bears for all that. Okay. Um, let's see. Next government shutdown coming up in January. Yes, that is true. Well, could, right? Let's see. Will markets drop hard again? James, is this recorded? We're live. I mean, it's recorded. Last couple of times I've had audio issues where I couldn't post it. So I don't know if it will be posted, Rick, but I will try. I'm hoping switching back to my old audio setup that it works and we don't have audio issues and then I can post a recording. But the last two times it was just my mouse moving on the screen. So, let's see. Priyanka, we did look at Melly. I'm not sure if you saw that or not. And we looked at Coinbase as well. I don't know if you saw that as well. Um, let's see. What's the other one? Sorry for the ums, guys. There's something else that I saw. I cannot find it. Okay. So let's get back to it. And last thing, let's take a last look at the spies, the Qs, and to see if we have any more major kind of downfalls. Uh, wow. 574 in the Qs. That would spell bad news for tech on that one, if that is the case, and we're close to it. So $15 fall on that, which would be $1,500. And I mean, look, guys, the correction territory for us, right? As you all know, I think I've done this math for you a couple of times. The average PE ratio, right, is 17.31. If we're currently sitting at 39. Well, if we take six, what are we at? What's the SPY at? 60, let's call it 6,600. 6,600, divide that by 39, times that by 17.31. That would mean that the stock market should currently be sitting at $2,929 on the S&P 500. If we minus that from 6,600, that would be a 3,670 point fall in the stock market. Right? That would be a 3,670 point fall in the stock market. That's whenever that correction occurs. The Japanese yen could spell the opportunity for the correction. Okay, that would spell disaster for a lot of things. I don't know if we'll see it drop down to 36, but I think that if we get it from 3,600, that's a huge drop. It's a three. I mean, that's massive, right? So we're talking numbers back in 20. We'd be looking right here. Let's call it 23. So losing 2 years of gains. Has that happened before? Yeah, this little thing called COVID. The exact same thing happened. This little thing called the dot-com bubble. The exact same thing happened. This little thing called the 2008 recession. The exact same thing happened. Here's the deal. You have the ability to learn how to protect yourself, how to protect all of your investments, how to never lose money in the markets. And it's a conversation, right? There's no fear around it. It's just a conversation. So feel free to book time with me, guys. We should have, I know I have a webinar Tuesday. I know I have a webinar on Friday. I'm excited to see you guys. I will let you guys know about any other presentations that I have coming up. As well, if there's any other questions you have for me, please reach out or book time on my calendar. Send me an email or shoot me a message on Discord. Appreciate the time with you all tonight. We talked about that yen carry trade. We talked about that, the circular financing. If you have questions about this stuff, reach out, right? Don't sit there. If I don't see you guys before, yes, David, you as well. Have a great Thanksgiving. Enjoy the time with your family and friends and loved ones if you are. If you're alone, know that somebody's thinking about you and loving you. If you don't believe that, well, I'll still think about you. All right. So, Dennis, yes, as long as the recording works, I will let you, I'll send out the link. Right. I hate to say that 100% yes when last two times I had audio issues and then I just replaced my setup and with my old setup. And so hopefully it all works now. So, if you guys need anything as well, let me know. Hope you guys have a great day, and I will see you guys in a webinar very, very soon. Thank you guys so much. Bye for now.